Hello everyone. Welcome to today's IronFX webinar. Please let me know if you are not able to hear me or see my screen. And also, so welcome everyone to today's webinar. And before we start, please take note that everything in this video is educational purpose and should not be considered as investment or trading advice. And please do your own due diligence before you guys trade. Okay, so today we'll be looking at breaking news and setup for the week. And I'll be presenting today. I'm Emily from EFG Group. We are the best finalists we are the finalists for Best FX Research and also Best Equities Research for the year 2020 and 2021. Okay, and here's the agenda for today. We will be looking at some key economic events that happen there's going to be happening this week, which is actually today and tomorrow. Okay, and we can look at some of the charts for dollar index, gold, oil, and some other currency pair. Okay, so for a start, okay, the upcoming one will be the ADP employment report. Okay, so happening on today, 4th of Jan, at 1:15 p.m. Which is I think 3 more hours later. Okay, so this data will provide more insight on the ADP job gain. Okay, because it has slowed in September to November. So forecast of 112K job gains for December. Okay, and over here you can look at the historical chart. Okay, for the whole of last year. Okay, as you can see on the chart here that the gains have slowed in the month of September to November. Okay, and you can see that in September is actually the low for the whole year. Okay, so in October's ADP number was revised lower. Okay, which leads to a soft labor market and means that it will be more bearish for USD. Okay, so as it was lower than forecasted, okay, so it will be bearish for US dollar. And also November's ADP number missed the forecast. Okay, so if you can take a look here, you can see the forecasted is 131K. But the November figure actually reported was only 103K. Okay, and since the number has missed the forecast, meaning that the labor market is soft and there is actually bearish for the US dollar. So the US dollar has been bearish for a while now, so people are paying attention for the December figures. Okay, so we can look to the tonight's this afternoon figure. Okay, and this is the figure for November. Okay, so November's report indicates a softening of the labor market, meaning that job hiring and pay rises are slowing down. And future job and wage growth are also expected to be moderate or even slow in 2024. Okay, meaning that it could be bearish for US dollar once again. Okay, so there's an article here on the press release. Okay, moderate growth in hiring, also another slowdown in pay gains, and also by chief economist for ADP. Mentioned that the hiring and wage growth will be slow in 2024. Okay, so this is how we kind of interpret the data. Okay, so this is the forecasted is 112K for the month of December. Okay, actual one will be reported later today at 1 p.m. So if this afternoon data ADP is less than 112K, okay, meaning it will be bearish for US dollar. Okay, so because of the negative correlation between US dollar, okay, with and the euro, the pound, Aussie, Kiwi, and gold were in terms of rise. Okay, so if it's bearish for US dollar, okay, this currency and gold will rise. And if ADP were to open higher than 112K, it will be bullish for the US dollar. Okay, and as a result, okay, the following currency like euro, pound, Aussie, Kiwi, and gold will fall. Okay, so if you're trading today, you can take a look at be more wary of the figures as it could be volatile for the market above. Okay, for the currency pair above, like US dollar and the euro, pound, Aussie, Kiwi, and also gold. And also tomorrow at 1:30 p.m., okay, 5th of Jan, the non-farm payroll will be released. Okay, so actually tomorrow there are actually a few data being released. One of them being the unemployment rate, non-farm payroll change, and average hourly earnings. But we could take a look at the NFP, non-farm payroll. So you can see that NFP has slowed in the second half of 2023. Okay, look at the numbers in June. Okay, it's a big gap, big drop from May to June. Okay, in May 2023 it was 281, and in June 2023 it has dropped to 105. Okay, so but it started to gain more momentum the month of July, and it's been fluctuating quite a bit. Okay, so let's take a look at the data. Okay, so although this is a November result. Okay, so although November's result was higher than the forecast, the figure was below the monthly average of 2023. Okay, so let's take a look at this. So in November 2023, US economy added 199,000 jobs. Okay, surpassing the 150 added in October, exceeding market expectation of 180,000 gain. Okay, nevertheless, it marked the second consecutive month with jobs addition below the average monthly gain of 240,000, okay, which is observed over the past year, signaling a slowdown in the labor market. Okay, so this is a summary taken from our NFP on the trading economics. Okay, so because the figure was still below the monthly average, okay, of 240,000. Hence, it is still considered a soft labor market, and as a result, it has caused the USD to be a bit more bearish. Okay, so once again, here's the forecasted, the middle row here. Let me use the pen. Okay, so here will be the forecasted for NFP. So it will be released tomorrow at 1:30 p.m. And how do you interpret the data? Okay, so because they forecasted 167K, right? So we normally use some comparison between the forecasted and the actual data. Okay, so if NFP is less than forecasted of 167,000, okay, meaning it's bearish for the US dollar. And likewise, because it's bearish for the US dollar, euro, pound, Aussie, Kiwi, and gold were in turn rise. Okay, be positive for the following currency and also gold. But if NFP is more than forecasted of 167,000, okay, and it will be bullish, okay, for the US dollar, and in turn, the euro, pound, Aussie, Kiwi, and gold will fall. Okay, so this is happening on tomorrow 1:30 p.m. Okay, so we are done with the economic event. So now we will look at some of the key indicators for sorry for some of the major currency, dollar index, gold, and also oil. If you have any currency that you'd like to look at, please leave it in the comment section. Okay, so here's the chart for the dollar index. Okay, so looking at the dollar index is kind of bullish. Okay, because it's over the Ichimoku cloud, but you can see that our momentum is changing. Okay, start to see that price is falling. Okay, since the new year start. So price has been, actually since yesterday, price has started to fall. Okay, it's going down towards the Ichimoku. This for the H4 chart, and on the daily chart is actually bearish. Okay, it's looking quite bearish on the daily chart. So let's look at some of the key support and resistance level. Okay, this will be using this as my first support. Okay, let me adjust a little. So okay, because the first support is slightly near to our current price, so I'll be picking this. Okay, you can see the multi-swing low. Okay, this will be my first support, and my second support will be this, also another swing low, multi-swing low here. Okay, my resistance here, this will be my first resistance level. Okay, which is an overlap resistance. Okay, you can see that the price has swing low, bounce off, breakthrough, and face some rejections here, unable to break through, and also here. Okay, and okay, this will be my second resistance. Plus, this is the H4 chart, so don't want it to be too far. And the first support is close to the 38.2 or Fibonacci retracement. Mhm. Use this because the 78 has been broken. Okay, let's see if I can okay, so I could adjust my second resistance slightly higher. Okay, it will be in line with the 78.6 Fibonacci retracement. So I have switched to the daily chart to look for my retracement level. So okay, so price could retrace to the 8.2 and bounce off. If it were to break the first resistance, it could be met with some rejections at the second resistance level, as it's also in line with the 78.6 retracement level. Okay, now let's look at some of the major currency pair. But for now, the dollar index looks bearish. Okay, before that, let's take a look at gold. Okay, so you can see that on the daily chart, gold is bullish, okay, above the Ichimoku cloud, but you also can see that price has started to come down. So for the past few days, price has started to reverse back down. And on the H4 chart, it's looking pretty good. Okay, looks like it is making its way up through the bullish Ichimoku cloud. Okay, so we have a really nice support here. And we have another support here. Okay, the second pullback support. And for resistance, okay, first resistance here. So we capture this pullback. Price bounce off, so it's a little overlap resistance. Okay, and the second resistance will be here, the swing high resistance. Okay, so we have the 61.8 Fibonacci retracement here. Okay, so price could meet with some resistance at the 61.8 level. That is in line with our first resistance level and see. Okay. Keep the 32, 38.2. Okay, let's see if I can find any more retracement level on the daily chart. Okay, so the 61.8 hasn't been broken, so we could keep the 61.8%. Okay, and we will go back to the H4 chart. Okay, so this is for gold. Can see that the price is rising to our first support level, away from our first support, bounces off. Okay, this nice pullback, and it is now reaching our 38.2 Fibonacci retracement level. So if we were to break, it will continue to go higher to the first resistance level, which is also in line with the 61.8 retracement level. Okay, so this is for gold. Okay, so now let's take a look at the euro dollar. Okay, so you can see that the euro dollar on the H4 chart it's kind of bearish right now. Okay. Not sure if it will be able to rise higher. Whereas on the daily time frame, it is the other way around. Okay, it's bullish, but it could turn bearish. Okay, nice support here. This will be our first support level. Okay, the multi-swing low. And this is our okay, so I'm gonna use this as the second one. Okay, let me adjust a little. Okay, I'm gonna pick this level, this little pullback as my second support. Okay, this is a good level of resistance. Okay, I can see that this is swing high resistance. And here we actually have a immediate resistance, okay, the overlap. So the once the price touches this point, it pull back. Okay, it did break through. It kind of bounces off and break through the this resistance again. Okay, so it is a little resistance here. And our second resistance could be this level. Okay, and we can use the 38.2 Fibonacci retracement level. Okay, so this will be our 38.2 Fibonacci retracement level, which is in line with our first resistance. Okay. Oh, hi, Water. Let me check the NFP. Wait a second, I put out my mics. NFP data will be released at 1:30 p.m. GMT tomorrow. Oh, sorry. Back to the chart. Okay, so there will be then the first resistance level align closely with the 38.2 Fibonacci retracement. Okay, and there's actually projection level in between the first and second resistance. Okay. Okay, so I'm just gonna leave my projection here because even if price were to break, it could be met with some rejections here and price could retrace back. Okay, so I'll now take a look at the pound. Okay, so for the pound, you can see that it's turning bullish. Okay, price is rising and it's now in the Ichimoku cloud. Okay, price is in the Ichimoku cloud and it looks like it's still going higher for the H4 chart. And it is also very bullish on the daily time frame. Okay, this will be our first support level. Okay, the overlap support. Okay, and this will be my second support. Okay. which is another overlap support. And on the resistance side, okay, it will be the swing high here. And lastly, okay, there's nothing in between. So I'm gonna pick this as my second resistance. Okay, and we'll look for see if there's any retracement level. Okay, I'm gonna list 78.6 and also here. Okay, we could use the 61.8. And maybe we could also do a projection. Okay, there's no projection. Okay, but overall, so this will be for the pound dollar. Okay, so you can see that the price has bounced off the first support level. Okay, it's rising towards the first resistance level. And we have our first resistance here, which is also close to the 78.6 Fibonacci retracement area. And on the second support, we do have the 61.8 Fibonacci retracement. Okay, so it makes it a stronger support. And 50% is on the first support level. Okay, next we'll take a look at dollar franc. Okay, so um, so for okay, so a question here, how do I know that the market is rising? I must buy, or is going down? I must sell. Okay, let's take a look at the dollar franc here. Okay, so you could because for buying you want to buy low and sell high, and for selling should be you sell high and buy low. So just okay, let me try to give you an example here. So using the dollar franc, you can see that the general momentum is going down, okay, because it's already going so low. It's kind of hard to predict where is the lowest low. So try not to chase the market. Okay, so instead could wait for the price to rebound. Okay, so you can see that price is going all the way down, and you can see that currently there is signs of rebounding. Okay, and this on the daily chart. So if you like to do a lot more long-term trade, you could use the daily chart. But if you prefer to do shorter term trade, you could start with the H4 chart. Okay, it is also bearish, so you can use the Ichimoku to kind of gauge the current momentum. So for dollar franc, you can see that the momentum is bearish. Okay, anything below the cloud is bearish, anything above is bullish. So right now it's still bearish, but looks like the prices are going up but not strong. Okay, and after that we will use some support and resistance to time our buy or sell entry. Okay, so for this particular one, the price is so low. Okay, this will be my first support. So I will first draw my support and resistance first, my second one. Okay, and we have immediate resistance here, the overlap. Mhm. This is- Okay, because you don't want the support and resistance to be too close like this. So I'm just gonna change this to the immediate one. So I put dotted line, but I still want to keep this. So this will be my first resistance. So the first support and resistance level are not so close together because this is the H4 chart. I'm just gonna pick this level. Yeah, do I need to be cutting through too many of the wicks? Just close. Okay, so after you have drawn your support and resistance, okay, it's kind of clearer where the price is heading to. So you can see that it's in between first support and first resistance, kind of neutral. Market is still undecided. Okay, so for example, if we can see that price is going to reach the first support level. Okay, so there are two possibilities whereby the first one, price will uh hit the first support and the first support stays and help the price to rebound, and hence because the price bounces off this first support and rise to the first resistance. Okay, because there isn't anything in between, so uh highly likely, okay, the price could go up to the first resistance before face any rejection. Okay, so if you see that price is coming down to the first support and it did not break through the first support, okay, you can see bullish candle all the way. Once you see a confirmation bullish candle, it's good to enter. Okay, and a general rule of placing your support and resistance. So example, I will to my buy entries here at the first support level. I will put my stop loss. I'll put my stop loss. Okay, at the next support, I'll be placing it somewhere here. Okay, slightly beyond the support, and I will place my profit taker before the first resistance. Okay, because of the resistance level, okay, price is unlikely, okay, to break out of the resistance level. So if you were to place it beyond, okay, price there's a possibility whereby the price will not hit your profit taker, okay, before rebounding back. Okay, so this is the first scenario. Price could bounce off the first one. Okay, it could retrace first or reverse to first support before bouncing off to hit the first resistance. Second scenario could be very bearish, okay, due to the news. So it could be very bearish for the US dollar. It could break the first support. Okay, it could break the first support, and after it breaks, okay, kind of signal a sell. So, but of course, you have to do your own due diligence, okay, not just on support or resistance. You should also utilize other indicator like MACD, stochastic, and also the general momentum of the chart, whether it is going downtrend or uptrend. Okay, so second scenario, it could break the first support and fall to the second support level. Okay, so you could use your support and resistance to kind of guide your entry and also exit. And to make your support and resistance stronger, you tend to find Fibonacci retracement area. So example, okay, if you can see on the chart, the second resistance is also in line with the 61.8 resistance Fibonacci retracement area. Okay, so there is a high chance whereby it adds to the higher possibility of the price being unable to break through. Okay, because this is the level where rejections are met. Okay, they are faced with rejections. So 61.8. And the first resistance is also in line with the 50% retracement level. Okay. And this is for the dollar franc. Okay, kind of neutral, maybe a little bit bearish. Okay, next we're gonna look at dollar yen. Okay, dollar yen now is bullish. Okay, so you can see that there is a reversal. Okay, over here, price is moving up above the Ichimoku cloud on the H4 chart. And on the daily time frame, it's actually bearish. Okay, so depending on your trading style, okay, whether you are short term or long term, okay, these are the different chart that you could utilize to help you determine your entry. Okay, let me remove this. Okay, first resistance is swing high here. Okay, our first support level. Okay, the second support is this swing low. And next, second resistance. Okay, second resistance overlap. First resistance also overlap. Okay, the trends are too significant to draw the retracement. So I'm gonna switch to the daily time frame. So if you are unable to draw any retracement, you could take a look at the daily time frame. So it will be clearer. Okay, the trend lines are much clearer as like you can see here. Okay, this is the swing low or swing high. Okay, the second support is close to the 78.6. Okay, because it hasn't broken the 78.6 retracement level. Okay, so this one still stays. But for the rest, it has been broken through, so we are not able to use this level. I'm gonna keep the 78.6 here. Then highlight this. We could also draw another one here to find resistance. Okay, and we can use the 38.2 and also keep the 61.8. Okay, and the 38.2 is right on the first resistance level, so it makes it a strong resistance. Okay, with both 38 and 50% Fibonacci retracement and also the overlap. Yep, the overlap resistance. And I've kept the 61 here because it's also close to our second resistance level. And the 50 as well. So there's actually quite a strong resistance here starting from the first area. Okay, and support wise, we do have the 78.6 supporting the second support. Okay, so looks this will be for dollar yen. Okay, and the last one we'll look at let's look at one more, which is oil. Okay, oil is bearish. Okay, right under the Ichimoku cloud on the daily time frame and on the H4. Okay, it's slightly bullish, moving up into the cloud. So we have an overlap support here. The second support is here. Pullback support, our resistance level. This would be cutting through too many of the weeks, so I'm just using this. Okay, I'll be using this for my first resistance. Okay, second resistance. Okay, and connect the 2 weeks here. So makes it a stronger support. So this will be a multi-swing high resistance. Okay, not able to draw any retracement on the H4 chart. So let's look at the daily chart. Okay, it's slightly choppy. Okay, so no retracement area for the oil. So this is for your, okay, so it looks like it has a bounce off, broken through the first support and it bounced off the level and is rising to our first resistance. Okay, this on daily chart. Likewise for the H4. So it has bounced off from first support, rising to first resistance level. Okay. And NFP, data, right? They are actually released every month. Okay, so it's actually released every month. If you like to look for more okay, let me show you my screen. Okay, correct. So usually I will go to Forex Factory. Okay, so if you select your time and date, okay, you can see the okay, mine is in GMT 8. Okay, so you can change your time here, you can change to your time zone. Okay, you can use the other one will be UTC 0. Okay, but I'm gonna leave it here first. So you can see the happenings for today. You can click in, okay, to see what is it about, the effect, why is it important, and you can toggle your mouse here to see if it's high impact, medium, or low impact. Okay, and also on the date, you can also select for whether you're gonna see this week, next week, or even month. Okay, so this is this week's data. And also can filter the impact level. Okay, and the impact on the currency, and how does it impact currency, and the forecasted and actual data. So example will be is the forecasted data, okay, is okay. So if the actual data is better than forecasted, it'll be in green because it will be good for the economy. It'll be good for the currency. Example, this index for Chinese yuan. Okay, actual better than forecasted. So it's red, green in color. And for this ISM, manufacturing pricing, okay, actual is worse than forecasted, so it will be in red. So you have a negative impact and positive impact, okay, depending on the color. So you can look through this for your weekly or even monthly economic event. And okay, because these are the events that will affect your currency that you are trading. Okay, and not just currency, but also oil and gold especially. Okay. Okay, so I hope I have answered your question for today. So if you have no questions, okay, thank you for attending today's session with IronFX, and I hope to see you guys in the next webinar. So thank you for attending, and stay safe and trade safe, and see you guys in the next webinar. Bye bye.